In this video, I'm going to explain why an ATE captive is a good fit for a funder and its law firms. Firstly, what is a captive insurance company? A captive insurance company, referred to simply as a captive, is an insurance company that is set up and wholly owned by a non-insurance company to act as a direct insurer or reinsurer for the parent company and its subsidiaries. In this case, a funder. The primary purpose of a captive is to reduce the company's total cost of risk. Captives are often used as an integral part of a company's international insurance program, but can also cover local risks or be used in a purely domestic structure. In fact, captives can take a variety of forms and cover a variety of risks, depending on the specific goals and needs of the parent company. A captive is a legitimate licensed insurance or reinsurance company, but it does often have a limited scope in that typically, it will only cover the risks of the parent company and its subsidiaries. On the other hand, this means that the regulations a captive must comply with, which are established by the location in which the captive is domiciled, in this case the Cayman Islands, are usually less stringent than for insurance companies covering risks for third parties. It is possible in certain situations and domiciles for a captive to take on third-party risks, but doing so usually increases the regulations it needs to comply with and increased capitalization. So, what are the reasons for setting up a captive as a funder? A captive gives the opportunity for a finance company to take a full debenture on the underwriting profit in a captive where ATE is offered as a form of security. A captive builds up reserves to increase risk-bearing capacity over time, especially for long-term risks. A captive shares the group's risks, which helps to motivate the group to improve its risk profile through long-term risk management strategies. Law firms and departments within law firms can use a captive to manage risk for all types of litigation that they might undertake. For example, commercial litigation, financial mis-selling, clinical negligence, housing disrepair, employer liability, RTA, product liability, and so on. A captive may reduce costs, specifically in relation to premiums paid and tax-deductible loss reserves. Also, investment income earned on premium to captive and loss reserves. A captive provides direct access to reinsurance markets and can offer broader coverages to the group or departments. In the event of claims being made, they improve cash flow and ensure there is a reduced risk of claims being challenged or unpaid. This is something a standard ATE provider has no interest in. A captive creates a formalized approach to self-insurance and the funding of risks. How do we set up a captive? Firstly, there are the setup fees and the feasibility study costs. These costs are around £50,000. This will include the lawyer's fees and the fees for the application process. It can vary for each domicile. You will need to capitalize the captive. In the period of building reserves, the regulator will require adequate solvency prior to operation. This is to ensure that any claims can be met in the short term, while reserves are building up. This means an initial amount of capital may be needed from the outset. This can be done by a deposit or by a revocable letter of credit. It is usually a minimum £100,000, again, depending on the domicile and the captive structure. Deciding to operate a captive expresses the confidence in the ability to perform based on knowledge and skill in your chosen profession. Companies with captives tend to have large enough premiums to warrant the annual cost of running a captive. Typically, yearly premiums over £1 million make it more feasible to have a captive. As a finance company, there will be collective premiums in excess of that figure. 15 to 20% of the funding of a law firm is usually the ATE premium. A strategic approach to managing risk exposures, cost of risk, with a willingness to increase a share in the risk, enables the capture of underwriting profits. Is clearly a better option than simply buying insurance at the lowest price. A commitment to improving your risk profile through strategic risk management, building and benefiting from long-term relationships with insurance partners, reinsurance and/or carriers and fronting insurers, is an obvious advantage. Corporations with exposures to risks that are difficult to insure or even uninsurable. With solid claims history and extensive formal risk management processes in place that ensure they have loss experience that is better than the market, will allow them to benefit from a reduction in the cost of that risk. There is a tendency towards high-frequency claims with low severity. all of which lends itself to a captive arrangement. A captive can cover almost any type of risk. In fact, a captive can even cover risks for which there is no product in the commercial market, or that no insurer is willing to take on. Many other types of general insurance and employee benefit solutions can be added to a captive. A captive works better for a law firm. When a client enters into an agreement with a law firm in the UK, the client will be offered a form of conditional fee agreement or damages-based agreement. This agreement will be backed by a funding arrangement and thus may require an indemnity from the law firm to cover the costs, both from the opponent's representation and law firm itself. This puts the client in a no-win, no-fee position. The indemnity will cover the law firm for such eventualities. This unique cover gives the client complete peace of mind. The premium level is determined by the level of costs that may be incurred for the type of case underwritten. This is of significant benefit to the law firm. Unlike conventional after-the-event insurance cover from the market, the firm can make informed and calculated claims on the policy. Claims can be honored on an instant basis. The reason for this is it can show its own risk management and underwriting at the risk assessment stage of taking on the case. Should there be a material change in the facts, it can decide to claim. With ATE providers in the UK, making claims can be very hit and miss. They want more reporting, requesting counsel's opinion, sanctions on which disbursement providers, medical agencies, and many more reasons for not paying a claim make a captive a lot more attractive. Utilizing the management of the captive to underwrite its decision process is almost like a delegated authority program, to which you may be familiar. Reinsurance for an established captive is considerably easier to acquire, but never a given. There are many deciding factors. Whilst insuring with a captive, the law firm may require greater capacity. This is very unlikely, however, provisions can be made if needed. A captive manager will of course keep an eye on how the captive performs. At the end of every underwriting year, an actuary will report on its performance. This information can be used to invite a reinsurance company to offer extra capacity. For this it will ask for one of two things, or a combination of them. Aggregate stop-loss reinsurance, a type of reinsurance in which the reinsurer pays losses in excess of the attachment point. This is the point of expected losses plus a percentage. This kind of protection, if unlimited, caps the annual aggregate loss of the captive or insurer. Quota share reinsurance allows an insurer to retain some risk and premium while sharing the rest with an insurer up to a predetermined maximum coverage. Overall, it's a way for an insurer to boost and preserve some of its capital. In conclusion, a captive is a great fit for a law firm and its funders that manages their own risk well. Some of the biggest law firms in the country gain the benefits of using or owning captives. So, why Wilks? Wilks has been in the ATE market for over 20 years, structuring captives for law firms for the last 9 years, and have owned and operated an ATE brokerage for 13 years prior. Wilks has seen the rise and fall of ATE providers and funders. It has been our belief that law firms and funders should work closely using the benefit of a captive to manage their collective risk. Last year, we made the decision to work with one of the largest captive managers in the world. This is in addition to our long-term relationships with captive managers in Guernsey and Bermuda. This means we have coverage in the top global domiciles. Join us, and you will have the benefit of our experience, knowledge and contacts in this exciting and profitable industry. We can tailor your program, give you the best domicile, legal representation, monitoring, and compliance available. When it comes to ATE, it makes sense to choose the right vehicle. If you want to know more, arrange a free private consultation. I look forward to introducing you to this exciting industry. Sincerely yours, Keith Wilks, CEO.